Make no mistake. Oh, this is so good. Consistent big returns require, number one, concentrated positions, right? You're not trying to buy everything. You're only trying to buy what is working. High turnover. And it's not turnover for turnover's sake. It's turnover saying, okay, I'm going to let this run as far as it can, then I'm out. I'm going to let this run as far as I can, then I'm out. I'm going to let this run as far as I can, then I'm out. There's no reason to hold on to something for 6 or 8 months if it ain't working.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. On today's episode, we're going to stop talking about how to trade and show you exactly how we do trade inside the 10-minute trading room. So be sure to stay to the end so I can show you exactly how to get that $5,488 worth of trading education for free. Let's get into it. I'm going to show you every single trade that we put on over the last couple of weeks and how we traded them. And hopefully you'll find a ton of value with this. So here's everything we've traded inside the 10-minute trading room. The How to Trade Stocks and Options podcast is now exclusively on ShareVision.com, the first dedicated streaming platform for the world of finance. And that's where you can find us every single week over at ShareVision.com. Just head to ShareVision.com to learn more and type in 10-minute stock trader in the search bar. Come like and subscribe. I can't wait to see you over there at ShareVision.com, the first dedicated streaming platform for the world of finance.
Good afternoon, traders. Happy June 9th, year of our Lord 2022. I don't say that I told you so. But finally, we got the movement we needed to see in the market. Let's check it out real quick. Oh, hang on. I got to click a couple extra buttons here. Oh, snap. That's what we wanted to see. That's what we wanted to see. Now, we don't have the 5 or the 10 crossed under the 20 just yet. But mathematically, tomorrow, it's a very high probability of happening. So I'm super excited about that. Finally, breaking out of this range when we can do something, right? So, Kavan, good to see you, my friend. Donna, glad you made it. Hey, if you're here, make sure you say hi. I would really appreciate the opportunity to just say hi back to you. Yesterday, I had a great chat with our mutual friend, Jay. And it was really great. I got to learn a lot about Jay, learn about where he's come from. He's traded in the past. One of the things that I was really impressed with Jay is that he dedicates a certain portion of his money each year for education, for self-education. And I was really impressed by that because that's something that I spend a massive amount of time and money and attention on, is improving myself. And to hear somebody in our trading group also spends a very large amount of time working on himself. Very, very proud of you, Jay. That was awesome. Jay also asked if I could really break down and step-by-step through the relative strength scanner today. So one of the things that we're going to be doing on defensive days is really talking about defensive days, transition days, really talking about the process, giving a couple extra minutes on the process. And that way, when an offensive day comes through, we can snap through it. And as you guys know, we can do this really quick. What slows us down most of all is just me jibber jabbering. So glad to meet Jay and glad to learn more about him. And I'm super stoked that he's here with us. Maria, good afternoon. Good to see you. Bob, glad you made it, my friend. Mike, first time I've seen you here, man. Good to see you. And it's cool. I can see your profile picture. Cool. Glad to have you here, Mike. All right. Let's do this. Let's get into the market analysis. We'll talk through it, and then we're going to get into the step-by-step on the relative strength scanner. All right, here we go. Welcome to the 10-minute trading room. This is how to trade in only 10 minutes a day and exactly how to take the guesswork out of trading. Now, with our 10 minutes to freedom trading strategy, it always starts with the market, and we finally got some movement in the market where it's been sideways for a few days. And I know on those sideways days, the urge to make something happen, the urge to make trades, the urge to do anything can be hard to overcome. It really can be. But strategically holding cash is the way traders, not just in our trading room, but that's the way successful traders think about it, strategically holding cash. So let's take a look real quick. Let's see if we have the 10 under the 20. A minute ago we did not, but it's really close. So the 10 is the blue line, 20 is the black line, and yeah, they are mega close. Like I say, tomorrow it mathematically should come through as long as it's below 409. If we're below 409 tomorrow, mathematically we should see that crossover happen. Next, prices under the 50-day. So yeah, this range looks like it's going to be breaking to the downside. This is what I was expecting. Granted, anything can happen, as we all know, but based on the market breadth, that's where I said I don't think we're going to have the move to the upside. I think the move will be to the downside. So market breadth came in at 38%. We want to see that over 50% to go long, under 50% to go short. And lastly, FinClub had a red day today. Now, the combination of them would give us an offensive day. For me personally, I'm going to wait one more day just to get that confirmation on the 10 under the 20. So when we don't have the confirmation of all of those, that makes it a transition day. Yesterday, we went to full cash, 100% cash right now, and we were waiting for valid market setups. And as Mark says right here, wait in cash for proper setups. How long? As long as it takes. And remember, this is the key one. I told you this yesterday. I said, you know what? This is not hyperbole. This is not an exaggeration. This is not theory. This is practice, right? Let's take a look real quick on the charts here, right? This base formed here, right? This range-bound base formed here. And Mark says this: you need to exercise sit-out power. Because remember, while you're doing nothing, holding that cash, less experienced, lesser disciplined, and less skilled investors lay the groundwork for your success. They're building the basis, and we're going to buy the breakouts. Like I said, that was the plan. Let them build the basis. We'll buy the breakouts to either direction. So transition day today, but I definitely will be working through on the relative strength scanner in just a second here. Good afternoon, Brad. Good to see you. Bob asks, can you show how you copy the trend spider? Absolutely. So let's do this, Bob. I'm going to step by step, and I'm going to go slowly through this. Please, in the chat box, if I say something that doesn't make sense, or if you have a question, please be sure to put it in the chat, because I'm here to serve you. I'm here to serve you. Okay, so let's do this. The way that we do this is in the process. We go through the market, then the charts, then the relative strength. So the way that we get the export for the relative strength is by running the power scanner. So let's go do that real quick. The AR chart, bearish power scanner. So just a one-click operation. However, if you wanted to use this button right here, market scanner, does the same thing. Same thing. And you're going to see the results populate through. I like it over here because it's just handy right there, but yeah. Now, the criteria for the power scanner are already in this PowerPoint. So it makes it pretty easy if you want to go and build that up for yourself. Now, these are going to be the exports out of here, and there's 98 exports. So first things first, go into the members area of the trading room. Then go over to the relative strength scanner section. So trading room benefits, relative strength scanner. And when you get here, there's a video explaining how it is, what it is, but we're going to do a little bit more than that. And I don't know why it's not loading. That's weird. It should have a video right here. There it goes. Okay, it took its sweet time. There's two things I need you to download. First one is the relative strength scanner itself. Now, this is a Google Doc drive, or Google Drive document. And this is what I built. What I have gets shared directly to here, okay? So when you pull it open, it's going to look exactly like this. You want to hit make a copy, and this will go into your Google Drive account, your Google account. You know, your amazing first name and baller last name at gmail.com account. All right. So that's going to go there, and you're going to be able to keep that forever. The second thing I need you to download is this file right here. And this is an Excel file. Now, when you click it and you download it, let me get out of the way so you can see. When you click it and you download it, right, it's going to look exactly like this. And you need to enable the macros to make this work. So hit enable. And it's going to ask if you want to enable macros. So hit enable. The reason we have this is really simple. When we export out of TrendSpider by doing this, here's the step to export it out. So hit these three dots, hit clone watch list. And when you do, it's going to pull up the 98 charts that just passed. For me, I like a nice shortcut, so I hit Control A and then Control C to copy all of these. You could also, drag and right-click copy, same thing. So we're going to copy all of these and go into here. Now we haven't copied, we haven't done anything yet. We haven't pasted anywhere. Before pasting, click the blue button. When you click the blue button, I wrote it so it pastes it for you, then it transposes it, and it puts it in groups that fit inside of the relative strength scanner. In fact, let me do this side by side so you can see it. So it's going to paste these for you. Then it's going to go ahead and copy it for you. So the only thing you have to do at this point is just go to cell A5 of the relative strength scanner, which you already copied into your account, and hit Edit, Paste Special Values. Now, I like Paste Special Values because it keeps the formatting, but you can literally hit Control V. It'll go in there, but all the text will turn over. Instead of it being yellow, it'll be white. But yeah, either way, that's how it works. Now, when we run this, we're going to see several to choose from here. So what I like to do is I like to use this filter, and I only figured this out like 3 weeks ago. I like to use this filter and only have setup for entry checked. And when I do, instead of 36 names coming through, it's only going to show us the 7 that are set up for entry. Then you're going to copy once more, and you need to keep a second list. So for me, really it's my primary list. So this is my primary list. I'm going to paste it into the primary list. So I'm going to go edit the list. And you'll see the vertical that we did just dropped in vertical here. And you hit save. Good to go. Makes it really simple. Now, until TrendSpider builds in the relative strength function, this is an extra step that we need to do. And the reason being, and I did a whole webinar on this, and I really would encourage you guys to go watch this. The is it Fortune Hidden in Plain Sight? It's Crippled by Opportunity. I remember that. Hang on. How to find beast mode stocks. This is the one that explains why we use relative strength, right? We had 98 charts that pulled through, but those 98 charts, not all of them are going to be great. We want to find the ones that are great and getting better, not just to themselves, but to everyone in their group, to everyone in their peer group, and against the market. That's the objective with having the relative strength scanner, is to really pull out the ones that are working the best. And then you just repeat for the second group. Copy. And it's limited to 32. I pushed the boundaries on this. So this is using Google, free Google data. And I tried to make it work with 100, and Google was like, you are pulling way too much data. You cannot do this. So I did find that 32 is a magical number that works. So that should cover how to use the relative strength scanner. So in a nutshell, run the scanner here, take the export of the scanner, paste it into here. In a nutshell, that's what we're doing. And then take what comes through that's set up here, back into TrendSpider, into your master list, and you're good to go. Now, of course, I'm going to take this trading room video and I'm going to put this in here in the relative strength scanner. That way you can come back and watch this forever, and you can pause it and go through it step by step. And that was what Jay asked for yesterday. It was a real step by step. And so that's why I wanted to take the time to do that today. So Jay, I don't know if you're here. I didn't see you in the chat, but I hope that helps, my friend. Nima, where does the Excel file extract data from? Is it consistent, or do we need to update the file every now and then? Do we need to have TrendSpider to run the file? So the relative strength file, the relative strength data here, this pulls from Google, and anybody can use it as long as you've got like a Gmail account. Whatever account this ports to should be fine. It's all free data that anybody can access. Now, if you want to see what data does get pulled, you can go over to the dashboard data pull, and you can see I pull 200 days of data for all of these stocks that come through, And that's why Google's like, maybe not so much at 100 records, but 32 will work. And then once it pulls through all those 200 data points, I then go through and I do all the calculations, right? I'll do the moving average calculations. I'll do stop loss calculations. I'll do signal calculations, relative strength calculations, all that stuff. And it's automatic for you. I am a huge data nerd, as you could not tell. So I tried to make this as simple as possible. Jay, my friend, you made it. Just to catch you up, Jay, thank you again for that call. I really appreciate the opportunity to meet you, learn more about you. And I was really impressed by the fact that you spend a certain budget each year for self-improvement. That's so wise of you to do that. And I went through this step-by-step on how to use a relative strength scanner. Also, I forgot to mention, on this page here is a couple extra things that you definitely need to fill in. So first, the market posture is automatic. You don't have to do anything there. FinClub, you can update this as you go. So like if it were green today, just type the word green in, and it will change everything around for looking for long trades and see what pulls through here. But I just leave it in red until it comes through. Next, MMFI. You don't have to update this as long as you know it's less than 50. If it's 50 or below, it gives you a different result than 51 or above. So keep that in mind, right? I changed it to 51 and it started looking for everything long. I'm all about how to simplify things. Your account balance. This is incredibly important. Fill this in because when you do, it will give you an approximate share size, or I should say appropriate share size and appropriate margin size for your account for options. Option contract size. I'm sorry, speaking over myself there. This is critically important, and this takes into account the volatility of the market. So as the market expands in volatility, your position size mathematically will shrink. There will be days, and Jorn has pointed it out, where it's like, Chris, this isn't enough. And I'm like, I know. It's because the market is so much more volatile. You want to trade smaller when there's volatility. Trade larger when things are slower and trends are easier. That's really important. Then lastly, this column here is for margin size. That's when we do broken wing butterflies on the indexes. So SPY, Q, and IWM. That should pull through with an appropriate margin size. Now, with the broken wing butterfly, you can put on huge trades, but the objective here is to find the margin size that works. So let's talk about how to find your margin size real quick. So go into Tastyworks or whatever platform you have. It doesn't have to be Tastyworks, clearly. I'm going to build up a broken wing butterfly in the SPY that is literally just me throwing stuff at the wall. So I'm going to do 2 411s, a 410, and a 415. So that's how you start one. And then you scaled it from there based on this number. So here in Tastyworks, you click this little button here. It'll say what your margin is. That max loss is your margin value. So if we need to get to 4,600, we just know, okay, I got to scale this up. I don't know, by a factor 20. So 20 on the 410, 40 on the 411, 20 on the 415. Like actually came out really close. So it'd be 40 units to get to approximately 4,600, give or take. So that's why it's important that you fill this out over here. And you don't have to do it all the time. You really don't. A lot of this is automated, right? But that's how this works and why it works. So I hope that was cool with you guys. Hope you don't mind. On an unrelated note, the futures trading is going really, really well. I'll talk to you about that real quick. So here was one of the entries that I put in, like the real money today. I don't paper trade. I like to do real money. This one was a small loser. This one, however, is working really, really well. And so that's doing what it's supposed to do. Let me show you real quick the strategy tester, I think. Yes. So this is on the bearish side. This has monumental returns, which I'm really, really happy about. Let this run for a second. And remember, with the futures, you get insane leverage. So a one lot of these micro futures is worth 50 SPY shares. It's essentially a $20,000 contract, and you only have to put on $300 of margin, give or take, right? And your broker may be different than mine, but mine was $300, and I was like, whoa, I can do a $20,000 contract for $300. I like where this is going. So yeah, check out the back test here. This really blew me away. So this is going 7,000 candles on the 12-minute chart, 28% return versus the SPY being down 8% during this range here with a 50% win ratio. I was really impressed by that because a lot of these, I've done lots of trials and errors trying to nail this down, but the win ratio at 50% was really surprising with the additional 28% gain, right? So average win, 88 basis points versus an average loss of 40 basis points. So you could put that in like whole numbers here. So like 0.088. If I did, no, I need one more zero. 88 times 400. So $3 per win on the stock, right? Moving the SPY moving $3. And if that's worth 50 shares, right? Times 50. So that's $176 winning on average on a one lot. I was pretty happy about that. And if your margin's only $300, that's nearly a 50% win based on the margin you put up. Now, does that click together, right? Yeah, so this has got some real legs to it. So yeah, just thought I'd share that with you more. It's not ready for prime time. It's in strategic testing right now, but I'm excited about it. And it's just the principles that we do every day. Okay, so very cool. Jay, I'm really glad to help out with that. I really wanted to make sure that we went through the whole relative strength scanner. Now let's go into our final thoughts real quick. Is it working? I don't know if it's working. I can't tell. It usually plays the video and I don't see it working. Hang on. There it goes. That was mega delayed. I don't know what happened there. All right. This was a really good tweet that I saw come through. Oh, Nima, great question. So you can use the S&P value. So you could use SPX. You could use, hang on. TrendSpider is weird. It's like, is it caret SPX? Yes. No, it's $ SPX. But it's delayed quotes. Don't ask me why it's delayed. I have no idea why it's delayed, but it's delayed 15 minutes. So I'm using SPY as a proxy. So yeah, you're entirely correct for sure. But yeah, I don't know why it's delayed. That's the weirdest thing. But they are basically the same. Basically the same. Okay, so here's our final thoughts. I tweeted this out earlier. I thought this was really good, or I retweeted, I should say. Make no mistake. Oh, this is so good. Consistent big returns require, number one, concentrated positions, right? You're not trying to buy everything. You're only trying to buy what is working. High turnover. And it's not turnover for turnover's sake. It's turnover saying, okay, I'm going to let this run as far as it can, then I'm out. I'm going to let this run as far as I can, then I'm out. I'm going to let this run as far as I can, then I'm out. There's no reason to hold on to something for 6 or 8 months if it ain't working. Next, keeping losses relatively small. I would say keeping losses very small, but still. Nailing down decent profits into strength. So this is where the differences lie between Mark and myself, because he talks about two different things, which confuses me a little bit. Because he talks about, what does he call it? Exposure, progressive exposure, which is his fancy way to say pyramiding into trades, which doesn't really ring true when you're saying nailing down profits into strength. So yeah, either way, taking profits when they're there. Never letting good sized gains turn into losses, right? When you're following a trend, when you have a plan for knowing when to get out, when to get back in, things like that, you don't let that happen. And that's so critically important. Next, periods of sitting in cash. Oh my gosh, who would have thought? Yes. Waiting in cash until the bases form, or the breakouts form from those bases. And then lastly, never average down. And that's a big one, a really, really big one, because most people, most traders who end up blowing up, right? They think, let's go to, Facebook changed its name today to Meta. So let's look at Meta real quick, right? There were people this entire way down saying, "Oh, Facebook's a great stock. Oh, metaverse. Oh, Facebook's awesome. Blah blah blah." Adding to losers, adding to losers, adding to losers. Getting monkey hammered now where the stock is down 50%. The quote, amazing stock that you just got to own down 50%. That's a really good way to go broke in this game. Never average down. Let me catch up with the chat here. I think our friend Yorn just joined us. Hey, man, glad to see you. Glad to see you. Jay says, happy to get a chance to meet and talk with you in real life. Video's a perfect go-to. You are so welcome, Jay. I'm going to crop this and put it into the relative strength scanner here section in just a little bit. Nima? Yeah, dude. Absolutely. I'm really glad that you mentioned that. Thank you, Nima. Bob says, good how-to video. Awesome. Very cool. Well, I do want to say real quick, thank you guys for coming today. It means it means the world to me that I can come and I can serve you every single day. I would be doing this anyway. I just feel very honored for the opportunity to hang with you. You are awesome. I will see you back here tomorrow in the 10-minute trading room where we take the guesswork out of trading. See you then.
Hey, don't forget, before you head out, head to secretinvestingbook.com right now to get your free copy of the Secret Investing Book. This is how to finally get a positively unfair advantage in the stock market. And it has 13 of the secrets that Wall Street does not want you to know. And I want to send this to you for free today. Just help me by covering shipping. And the way you can do that is by going to secretinvestingbook.com. That's secretinvestingbook.com, and I'll ship this out for you right away.